Zimmer Biomet designs, manufactures and markets orthopaedic reconstructive products, including sports medicine, biologics, extremities and trauma products.
It started out making the Zimmer frame, right? That's the old aluminium frame and splints that old people used to walk about in the frail care division. But they make the whole suite of things nowadays.
And now, given JP's addition, we know that it is based in Warsaw, Indiana. The market cap here
Exactly.
is $24.2 billion US, price to earnings ratio of 205.4. Yes,
How did
that's
that happen?
205.4.
We'll have to check
and
that.
a dividend yield
That's
of
correct.
0.8%. Expensive.
Yes, but there's a reason for that. They bought Biomet in 2015 and they had some once-off charges. So the normalized number is quite a bit higher, but it did lead to depressed earnings in the last year.
So
and it has been a problem for them.
Earnings numbers
It
higher,
is actually
so the
higher.
PE is
Correct. So the PE is, say, at 10, it's closer to 20 than 200 because
that's
of
what
that.
you'd expect,
But they have been really absorbed with this Biomet merger. They have been laying off certain of their sales personnel, their reps. So it's been tricky, and because of the inward focus, they've actually lost a lot of market share.
But they haven't done
in hips
badly
and
from a share price perspective. Paul?
Yeah, I mean, that is the combination. That's the Zimmer share price up to 2015, and then it adds the Biomet piece, and then it's done fine recently, similar to Stryker. So it's all got to do with, generally the trends in sales of hips and knees have been quite strong. And that's not just in the US, it's globally. But it's a function also of sort of corporate earnings and that underlying trend.
Are they going to be able to bed down the acquisition and then basically pull out the synergies to drive this one forward?
I think that's where the market are saying they're giving them the benefit of the doubt at the moment, but the jury is still out. It is the biggest acquisition ever. It has taken up the majority of the debt capacity on the balance sheet. So they've got a long history of making acquisitions, and right now they first need to get some synergies from the Biomet deal before they can pay down debt and do the next acquisition. So there's some uncertainty regarding that exact question.
Paul, your relationship with the stock from an investment perspective?
Yeah, look, we started off about 4 or 5 years ago looking for investments in this space, and at that point Johnson & Johnson didn't own that division, or maybe it had, but it was a smaller part, and we settled on Stryker and Zimmer, and for a while we sort of owned both. When the merger announcement with Biomet came through, we saw it as an opportunity to focus on Stryker because it was a much clearer, simpler story and a bit more broad-based.
Are you happy with the investment decision?
Well, we started sort of telling people, listen, let's just focus on the one. And as you saw from the chart, at first we thought we were quite clever, and since then it's also done well. So it's sort of 6 of one, half a dozen of the other.
So you maybe could have
But
maintained
it
your
was,
exposure
because
to
remember,
both.
the market cap is 25 billion and they bought Biomet for 13, so it was really like the merger of two equals. There was also an annoying split and the stock got 2 codes, and it was all
So
complicated.
It became too complicated for you. Let's call
Poor
this
reason
one
there.
hot or not.
Because of the loss in market share and the jury still being out on the synergies, I'd rather say not hot.
Paul?
I just like the product mix and the broad base, and I think the brand comes through in the end. It's a very big global player, so I'm going to go with hot as well.